This is the final market structure video in this course. And in this video I will discuss how to turn your scalp trades into swing trades. So we'll be going from the 4-hour time frame all the way down to the 1 minute to find our perfect entries. Let's use this GU chart as an example. We've seen this chart before in our previous videos where we had multiple sell entries here, with a take profit around this major structure point. I will go back and mark the same 2 entries we had at the top, and I will show you what you could have done differently to keep the trades and turn them into swing trades. This was our first trade taken from this order block sweep. And this was our second entry taking from 50% of our inefficiency zone. Originally we had this demand zone as our target, mainly because that was the goal of the video, to show you what is possible with a few simple intraday trades. In that video I also mentioned this high was our major point in structure, and unless this high was taken out, we were bearish. Only if this high was taken out I would expect the price to come in and mitigate something in these highs. But that never happened. This is how you turn your scalps into swing trades. You follow the structure, and unless you get a clear indication that price is reversing, there is no need for you to close your trades. Of course you're still taking profits as price moves down, but you should keep at least a portion of your trade and let it run as long as possible. Let's say you closed 50% of your position here at this demand. Unless this high is broken, there is no reason for you to close the rest of your orders. You could even place your stop loss just above this structure and let the price do what it wants to do without even having to watch the chart. We go back into the 1-hour chart. Overall, we know this demand zone has to be mitigated at some point. We don't know when, but we know it will happen. What we do know is that the price is bearish. Unless this high is taken out, we are expecting the price to take out the previous low and come into the demand here. So naturally, we target this low. This just doubled our risk to reward, and all we did was follow the structure and let the trades run. And it only took just over 5 days to reach targets. I will also point out, notice how this correction mitigated over 70% of this impulse move and mitigated this area of supply. That's why taking profits along the way is very important. If you waited for these trades to hit the demand zone and you didn't take any profits here, you'd be left with less than half the profit you had down here. You could still leave a portion of your orders after this take profit and let it run, but it's up to you. Some people just aren't comfortable holding trades for this long, and that's fine. We all have our own risk tolerance. Here we have another example. The price mitigated over 70% of this entire bullish move. Let me just turn on the fib level to show you. And we also broke this point of structure. We also have this area of demand. Let's zoom in now. We can see there was a massive accumulation of orders here, and as the volume cooled down, we got a final sweep of liquidity and we saw the bullish momentum come in. We change character and break multiple structures. I think it's fair to say, even a blind person can tell the momentum has shifted and we are now bullish. Obviously, you're expecting the price to mitigate the lows. But it doesn't always happen. That's why you simply watch the chart and react to the data that you're given. We have a sweep of liquidity, accumulation of orders and price reverses. A demand zone was left for us to enter from. Although you may think we are bullish because of this entire move, we're not. After all these breaks of structure, we are bearish. So naturally, you look for a major point in the internal structure to target for your take profit. Right here, this area of supply is our highest major point in structure. And it gets hit and the price reverses. This trade would have taken you 2 weeks and over 1,000 pips in profit. Never at any point during this entire move did you have confirmation of the price going down. After this low was created, anything that broke below this low would suggest a potential reversal into these lows. It just never happened, so you let the trade run. Whenever you're trying to find a 1-minute or 5-minute entry for a swing trade, you have to keep an eye on the higher time frame and wait for confirmations. You wouldn't try to buy here, because there was no confirmation of price continuing higher. The price never broke above these highs, so no confirmation here either. After this major structure break, you did have a tiny sweep of structure at this wick, so I wouldn't blame you if you tried to enter during this correction. I probably would enter here myself and lose. But it's all part of the game. And around this same area, after the price tapped into our demand, we had our confirmation. Once you see your confirmation, then you go down into the 5-minute or 1-minute and then you find an entry. Even if we go back to our previous example, you wouldn't try to short here, or even here, because you never had any major confirmation. Only after this high was taken out, we saw an exhaustion of volume and a lower time frame confirmation for entries. Even if we didn't see anything when the price was moving higher, we know the price goes from zone to zone. So naturally, after a major high or low is taken out, we at least expect the price to come back into the previous zone, which was here. That's good enough to change your short-term bias from bullish to bearish. And once you're in this trade, you simply watch and follow the structure. That's how you turn a scalp into a swing trade.